Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. Today is Tuesday, April 28th, and I thought I'd come to you with a brief market update, kind of let you know what's going on out there. As I speak, the S&P 500 is up a tad, maybe 0.2% to about 2880 as a level. That's about 80 points ahead of that 2800 level that we were talking about late last week. So we've had a positive start to the week here. And that's really driven by what we're seeing out of corporate earnings, and some discussions around state reopenings, which I will get to in a second. Just in terms of a level, in terms of thinking about where we've been and where we are, that is about 29%, just under 30% above where the sort of trough that we troughed in back on March 23rd. So quite a run that the market has seen over that time period. And as I've mentioned before, we're now actually in a bull market cycle. So just really impressive to keep in track of where we've been and where we are now. We are in the middle of S&P 500 earnings season. So we've had about 133 companies of the S&P 500 have reported. And I'm happy to say that the earnings that those companies have reported have been roughly in line with the estimates that we had going into the first quarter earnings season. So keep in mind, this is first quarter, not second quarter, and the virus activity really started at the beginning of March, or at least the virus-related shutdowns really started at the beginning of March. But it is nice to see at least that the 133 companies that have reported have shown an earnings decline of about 17% versus consensus analyst expectations of about down 15%. I think that's giving the market a little bit of comfort around analysts may have a better handle than people think on the magnitude of the virus's impact on corporate America. So that's giving a little bit of a positive tone to the market. The other thing that's giving a positive tone to the market is really candidly the commentary of the markets themselves. So we've seen numerous companies, among them 3M, Pfizer, PepsiCo, that have all come out and basically said, look, Q2 is going to be the worst that we see. They're calling for economic activity to sort of drop the most in Q2, but then see sequential improvement for Q3 and almost normalization in Q4. And they're basing that both on the virus data trends that they see, as well as what they're seeing in markets that have already peaked and started to reopen, namely China, and looking at the consumer demand patterns that are there. So I think that's also a positive undertone for the market and helps to explain why we're 80 points above that 2800 level that we talked about earlier. In terms of the public news, as I'm sure you're seeing, we're starting to see a lot more information from state governments, local governments around reopening procedures and timeframes, which I also think is just giving folks a little bit of sense of more normalcy, or at least what the new normal might look like, and removing a little bit of the panic and fear that was out there in the market, particularly during late March and early April. So with that, I apologize, this is a little bit on the shorter side, but it's mostly good news. As always, if you have any questions at all, please feel free to reach out to me or your advisor, and I hope you have a wonderful day.